Welcome to the deep dive. Today, we're putting LTIMindtree Ltd's Q1 FY26 financial results under the microscope. You've handed us a trove of detailed reports, consolidated financials, earnings release, the full earnings call transcript. Quite a stack. Our mission really is to cut through all those numbers and, the corporate statements. We want to distill the most important nuggets of knowledge and insight for you. The big questions are, how did this global tech consulting company actually perform in Q1 FY26? And what does it tell us about the wider tech services landscape right now? It's a dynamic market, isn't it?
Absolutely. And what's fascinating here, I think, is that we won't just be looking at the headline figures. We need to go deeper. We'll delve into the underlying strategies, the market trends LTIMindtree is navigating, and crucially, how they're connecting their financial health with these big client wins, and importantly, that ambitious pivot towards artificial intelligence. It's about seeing the whole picture.
Okay, great. Let's start there then. Let's unpack those headline numbers first. Give us the immediate takeaways. Revenue, profit. What jumped out for LTIMindtree's Q1?
Okay, so for the quarter ending June 30, 2025, LTIMindtree reported consolidated revenue of $11,153.3 million. Now, that represents 2.0% sequential growth quarter over quarter QQ in US dollar terms. And alongside that, a pretty solid 5.2% year-on-year growth, or YOY. If you look at it in Indian rupees, revenue was 98,406 million. That's 0.7% QOQ and 7.6% YOY growth. So decent top-line movement.
Okay, 2% sequentially in dollars. And what about the bottom line, their profitability? Did that keep pace? Or?
It actually surged ahead. That was quite striking. Net profit after tax, PT, came in at $147.0 million. That's an impressive 12.6% jump quarter on quarter and 8.0% year on year. In INR, PAT was 12,546 million, up 11.2% QOQ and 10.5% YOY. And perhaps key here, the operating margin, EBIT earnings before interest and taxes, a core measure of how efficiently they run things that expand by 50 basis points sequentially. So half a percentage point improvement, bringing it to 14.3%.
Right, 50 basis points. So a strong start to their fiscal year then, especially on that profitability front. What did the company's CEO, Venu Lambu, have to say about these results? Any hints on how they pulled off that margin expansion?
Well, he characterized it as a, quote, promising start to the year, delivering broad-based growth, expanding margins, and making significant progress on our strategic priorities. Standard CEO stuff, maybe, but he also really highlighted that the macroeconomic environment remains challenging. That's important context, right? He pointed to their disciplined execution and unwavering client focus as the key drivers. So it suggests they're, finding ways to grow and improve efficiency even when the broader market is kind of tough.
Makes sense. And we also have the auditors review Deloitte, Haskins, and Sells. What's their official take? Why should we care about that?
Ah, yes, the auditor's stamp.
Yeah.
Their independent review concluded, and I'm quoting here, that nothing has come to our attention that causes us to believe that the accompanying statement has not disclosed the information required, or that it contains any material misstatement. So what this means for you, the listener, is it provides a really critical layer of assurance. It basically signals that a major independent firm has looked closely at the figures and hasn't found any red flags. Adds a lot of credibility to what's being reported.
Got it. Okay, those headline numbers are definitely encouraging. Or the real story, as you said, often lies in how a company wins business, especially in this climate. So what were the standout deal wins this quarter? Anything that really moved the needle for LTIMindtree?
Yeah, the deal front was strong. The order book for the quarter was remarkably robust, actually. Hit $1.63 billion. Now, that's a substantial 17% increase year on year. And maybe more importantly, it's their third consecutive quarter pulling in over $1.5 billion in orders. That consistency is a really strong signal. The biggest win, and this one's truly notable, was their largest ever deal, ever. It's with a global agribusiness leader. And the focus is very much on an AI-driven model for things like application management, infrastructure support, cybersecurity, covering major platforms too as SAP S/4HANA, ServiceNow, Microsoft Azure. It's a big one.
Wow, largest ever and AI-driven. That says a lot. Were there any other significant new contracts that sort of highlight their strategic direction?
Absolutely. They were picked by a major European financial institution to be a long-term transformation partner. That involves migrating legacy systems and, again, heavily integrating Gen AI and automation. Plus, a foreign government organization chose them for a big digital transformation job overhauling its entire tax system. So these wins, they really underscore their ability to land and deliver these large, complex, strategic projects, which are often, the more profitable ones too.
Right, the big fish. Looking beyond those specific deals, how did this growth break down across different industries? Which sectors were the powerhouses this quarter?
Okay, looking at the verticals in USD terms, the consumer business segment really stood out. Robust sequential growth there of 6.2%. Healthcare, life sciences, and public services also saw solid growth, 4.8%. Banking, financial services, and insurance, or BFSI, grew by a more modest 1.6%. And the technology, media, and communication segment sort of stabilized, showing 0.8% growth. So decent spread, but consumer business definitely led the charge this quarter.
BFSI only 1.6%.
Yeah.
The earnings call mentioned that sector remains cautious because of the whole macro picture. So what's LTIMindtree's specific strategy then? How are they navigating that caution to still find growth in such a critical sector?
Yeah, that's a good point. Instead of just, a broad sectoral approach, they're adopting what they called a very deep, sharp focus on execution. Essentially, they're targeting specific accounts within BFSI that they believe have high growth potential. So it's not about waiting for the whole sector to bounce back. It's more granular and account-specific strategy to find opportunities even when things are generally hesitant. Show some agility, I think.
Okay, a targeted approach. And geographically, where do they see the strongest performance? Any surprises there?
Europe really stood out this quarter, showed strong sequential growth of 9.7% in USD terms. That's fantastic.
Yeah.
North America grew by 1.8%, still growth, but much slower. The rest of the world segment, which is a smaller base for them anyway, actually saw a sequential decline of 6%. They mentioned seasonality playing a part there. But yeah, Europe's strong performance really suggests they're gaining significant traction across the Atlantic.
9.7% in Europe. Wow. Okay, so with all this, the deals, the vertical performance, the geography, what does it mean for their client base overall? Were they able to, deepen relationships and grow their existing accounts?
That's a key metric. So the total number of active clients actually remains stable at 741. Good retention, right? But, and this is crucial, they significantly increased their number of larger clients year over year. They added 14 new clients spending $1 million plus a year. That total is now 404. For the $5 million plus clients, they added 11, reaching 159. And for their biggest clients, those spending $10 million plus, they added 3. That total is now 90. So this trend, growing those larger accounts, that's incredibly positive. It signifies deeper relationships, more strategic long-term work, which is exactly what you want for stable, high-value revenue. The CEO did add a note of caution, though, saying that while cross-selling and upselling are always a focus, success still depends on clients being willing to commit fresh spending in the current market.
Right. Makes sense. Okay, beyond the raw numbers, LTIMindtree's been talking a lot about strategic shifts. Let's dig into their Fit for Future program and those sales transformation efforts. How are these actually, hitting the bottom line or improving performance?
Yeah, the CEO is quite clear on this. He said the Fit for Future program has been instrumental in rebaselining our cost and improving agility. Now, that sounds a bit like corporate speak, but it strongly suggests they're optimizing how they deliver services, tweaking internal processes, basically squeezing out efficiencies, and that helps them expand margins, like we saw, even if top-line growth is just moderate. It lets them absorb some of those macro pressures or seasonal costs. And on the sales side, the transformation efforts are, quote, crucial in strengthening our ability to increase our win rate in large deals. That includes getting better at cross-selling and upselling, too. So it's about being more effective at actually capturing those big, complex projects we talked about.
Okay, efficiency and better selling. Makes sense. And what about their big pivot to AI? That's been a huge talking point. What does that actually look like? Do they have concrete new offerings? And more importantly, are there real client success stories emerging from it?
Yes, they've launched something called Blue. They're calling it their agentic AI ecosystem for the enterprises of the future. Big name. It seems pretty comprehensive, though. It includes AI advisory, helping clients figure out how to innovate faster with AI. Then there's an AI foundry for actually building tailored solutions and orchestrating these multi-agent AI systems. And finally, an agent marketplace, which already has over 300 industry and function-specific AI agents ready to go. It really sounds like they're trying to build a one-stop shop for enterprise AI adoption.
An agentic AI ecosystem, 300 agents. That sounds incredibly ambitious. What does that actually unlock for a client, though? Do we have any tangible results, any proof points yet?
We do, actually, and this is where it gets really compelling. They shared several examples, real-world stuff. For a large manufacturing company, they integrated AI into engineering and operations. The result? A 25% improvement in mean time to resolve issues, and a 30% improvement in mean time for self-service. That's a serious efficiency gain.
Wow.
Yeah. For a financial services client, AI-powered legacy modernization led to an 80% reduction in the time it takes to write complex logic. 80%. Plus 20% faster speed to market and 10-15% lower costs. Huge competitive advantage there.
Okay, that's significant.
And there's more. An auto rental major used a computer vision system they built. It cut vehicle inspection time from 2 weeks down to under 3 minutes, with over 90% accuracy.
2 weeks to 3 minutes, that's transformation.
Exactly. And one more, a utility company used Gen AI for maintenance work. Boosted field service productivity by 30%, cut rework by 28%, and lowered operational costs by 18%. So these aren't just small tweaks, right? These are major impacts directly tied to their AI offerings.
Those are definitely impressive results for their clients, but that raises a critical question. It's one thing to sell AI, quite another to truly live it internally. So how are they using AI inside LTIMindtree to drive their own efficiency? Are they eating their own dog food, so to speak?
Yes, exactly. And that seems to be a key part of their strategy, actually, especially for achieving that non-linearity we might talk about later. They've adopted AI pretty extensively across their own internal functions. They mentioned 62 initiatives currently running, spanning 7 product lines and 9 business processes. Examples include using Microsoft Security Copilot for things like incident response and threat hunting. Makes sense? And they've even got an internal AI companion named Rima working in HR. It helps with employee queries, talent attraction, onboarding, even provides insights for executives. So yeah, they're definitely using their own medicine, trying to turn themselves into an AI-powered enterprise from the inside out.
Interesting. Rima. Okay. They also announced a new joint venture, didn't they, in a pretty strategic region. What's the latest on that?
Yes, the JV in Saudi Arabia with Aramco Digital. It's called Next Era. It became fully operational this quarter. Now, it's still in its very early stages, they emphasize that. But they're apparently seeing good initial acceptance, good discussions happening both within Aramco and with other potential clients there. They did note that margins are expected to be slightly below the overall company average, at least initially. That's pretty common for new ventures in developing markets, though. But it clearly represents a significant long-term growth play for them, tapping into the massive digital transformation push in the Middle East.
Right, a long-term bet. Okay, beyond the financials and the strategic moves, a company standing in the market often comes down to partnerships and industry recognition, too. Anything new on that front for LTIMindtree? Any awards or analyst nods worth mentioning?
Yeah, they picked up some notable accolades recently. They won a Diversity and Security Award at the 2025 Microsoft Security Excellence Awards, and they were named Google Partner of the Year 2025 for Industry Solutions and Manufacturing for the second year running, actually.
Second year, okay.
They also got recognition from AWS, Databricks, Boomi, and Snowflake, so covering the big cloud and data players. And importantly, the industry analysts, firms like ISG, HFS, Everest Group, they recognized LTIMindtree as leaders or major contenders across a whole range of services. Things like the SAT ecosystem, Duck Creek services for insurance, energy and utilities, and even talent readiness for next-gen application services. These awards and recognitions, they aren't just for the trophy cabinet. They really reinforce their capabilities and credibility in key growth areas, which definitely helps them win new business.
Absolutely. Validation matters. Okay, let's shift focus slightly now to the backbone of any services company. It's people. What's the latest update on LTIMindtree's employee metrics this quarter? Headcount, attrition.
Right, the people side. As of June 30, 2025, they had 83,889 professionals. That's actually a slight dip, 418 employees fewer than the previous quarter. However, their trailing 12-month attrition rate remains stable at 14.4%. Not too bad in this market. What's particularly interesting, though, is utilization. Excluding trainees, that improved significantly by 2.3 percentage points quarter over quarter. It reached 88.1%.
88.1% utilization. Wow, that sounds quite high, doesn't it? Is that where the company actually wants to be, or does it signal something about maybe demand running ahead of supply?
That's a great observation. And interestingly, no, that's not their ideal state. The company actually stated on the call that their ideal operating level for utilization, assuming a sort of normal orderly demand pattern, would be slightly lower, around 86, 87%. So this current higher rate, over 88%, it does reflect strong demand, and particularly the ramp-ups on existing projects.
Wow.
It means their teams are pretty much working at full tilt. So to address this, and also to prepare for future demand, they inducted over 1,600 freshers in Q1, and they plan to bring in more throughout the year. The aim is explicitly to bring utilization back down into that healthy, sustainable 86, 87% range. They also noted they aren't seeing a significant skill set mismatch right now, which is definitely good news. It means they have the right people, just need maybe a few more of them.
Got it. Managing growth. Okay, and finally, let's look at the broader financial health maybe beyond just the headline profit and revenue. Any interesting movements in things like cash flow or the tax rate this quarter that stood out?
Yeah, a couple of points there. The CFO highlighted that while those Fit for Future initiatives helped margins by about 100 basis points, a full percentage point, that positive impact was partially offset by some headwinds. Seasonal visa costs, which hit in Q1, and some foreign exchange impacts. Their effective tax rate for the quarter was 27.3%. That was higher than the previous quarter. They explained this was due to a one-off tax impact related to bringing capital back from a subsidiary, repatriation.
Oh, okay.
And day sales outstanding, or DSO, basically how quickly clients pay their bills, that increased slightly to 81 days, looking at both billed and unbilled receivables. Not ideal, but maybe reflects the macro environment. Despite that, their cash position remained really solid. They had around $1.5 billion in cash and investments on hand, even after paying out their final dividend for FY25. So overall, a strong balance sheet.
$1.5 billion in cash, okay. Now, with all this talk about AI integrations, the Fit for Future efficiency drives we've discussed, are we actually seeing clear signs of non-linearity in their business? Is revenue finally starting to grow faster than headcount? Is that business model shift becoming tangible?
That's the million-dollar question, isn't it? Or maybe $1 billion now. And yes, I think the signs are there. The company explicitly acknowledged this on the call. They said signs of nonlinearity are indeed becoming visible over the last couple of years. They even stated they are, quote, adding revenue either with the same headcount or with a slightly less headcount already. Goal. Now, they were cautious, didn't want to call it a completely new business model just yet. Fair enough. But the trend seems clear. It's being driven by exactly those strategic initiatives we talked about, leveraging AI internally and externally, expanding their managed services offerings, and those Fit for Future efficiency gains. It really suggests they're starting to get more output per employee, which, as you know, is kind of the holy grail for IT services firms.
Right. More revenue, same or fewer people, that's the goal. Okay, so sum it all up for you, the listener. LTIMindtree seems to have delivered a pretty promising Q1 FY26. We saw broad-based growth, those expanding margins, all fueled by some significant deal wins, strategic cost programs like Fit for Future kicking in, and what looks like a really robust, tangible pivot to AI, both in what they sell and how they operate.
Precisely. And they manage this despite a macroeconomic environment that everyone agrees remains challenging.
Yeah.
It points to their disciplined execution, that deep client engagement they talked about, and a sharp focus on high-growth segments in these next-gen technologies.
Right.
Seems to be yielding genuinely positive results, positioning them pretty well, you'd think.
Yeah, this deep dive really reveals a company that isn't just, riding the digital transformation wave passively. They seem to be actively trying to shape it, especially with these AI-driven solutions and that strategic focus on profitability.
Which does raise an important question for you to consider, doesn't it? As AI continues to transform this IT services landscape, probably faster than many expected, how might those traditional models of growth and service delivery evolve even further? And maybe more importantly, what will truly differentiate companies? What will determine long-term success in this rapidly changing market over the next few years? Something to definitely mull over until our next deep dive.